Hello investors, wishing you all a very happy day. As I mentioned in the previous video, a slight pullback in the major market indexes was very much needed. Today, all three major indexes Dow Jones, S&P 500, and Nasdaq have pulled back. This creates great buying opportunities for certain stocks, while also showing us that some stocks simply aren't giving us any reasonable entry points. Now, let's take a look at Google stock. Currently, it's offering a very reasonable buy zone due to its corrective structure after hitting two short-term peaks. It has pulled back, and I believe today's pullback presents a good opportunity to buy in right around the closing price of today's candle. If it pulls back slightly again in tomorrow's trading session, a small red day, it would still be a good chance to buy in. As I already shared the stop-loss zone for this stock in the previous video, please refer back to that. I won't repeat it here, just follow the guidance I gave earlier. Next, let's move on to the stock ticker SIC. Looking at the chart, we can see that the stock has been accumulating for quite a good amount of time. Therefore, it is likely entering the final phase of its accumulation cycle. Investors should observe this stock closely. It is showing an upward price channel and is currently in a very attractive price range, which could lead to a breakout in the upcoming period. As such, investors should carefully monitor the stock's movements. For this ticker, we suggest opening a position in the price range of $385.0 to $388.6. If the stock closes on a daily candle at $373.1, it would be advisable to sell all holdings and watch how the stock reacts. In my opinion, this stock is unlikely to drop significantly because it has already shown a solid accumulation base. Therefore, the upward trend has a higher probability of continuing compared to a downward one. We will monitor the stock's behavior together to buy, hold, or sell flexibly based on whether it continues to follow a stable trend suitable for your portfolio. Next, let's talk about the stock ticker AMD. I've noticed that many well-known YouTube channels are mentioning this stock. Currently, as I mentioned in a few of my previous videos, the stock has pulled back. However, it has not provided any reasonable buy points at this range. From the perspective of a retail investor like myself, the stock needs more time to reaccumulate in order to confirm whether a new upward move can happen. During this reaccumulation phase, the stock often experiences price volatility, so investors should avoid buying when the stock hasn't spent enough time consolidating or shaken off weak retail holders who bought in at the recent uncorrected highs. For those who like this ticker, it's better to simply observe for now. If the stock shows strong accumulation in the future, we can come back and open a buying position later, rather than holding it for too long without any upward movement, which could waste time and cause unnecessary stress. Next, let's move on to the stock ticker Uber. This stock is currently in a very strong uptrend. In this video, I'll be filtering only stocks with positive trends to help investors like you consider the most reasonable buy and sell decisions for your portfolios. I will not include stocks that I haven't analyzed yet, nor will I feature stocks that are showing weak trends. Therefore, if you're a smart investor and want to know whether your current portfolio entries or exits are good, or if you're feeling uncertain or planning to buy new stocks but don't know where to start, or if there's any particular stock you're interested in but unsure about entry or exit points, feel free to contact me via the link to my channel below or leave a comment, and I'll review and help answer your questions. As for Uber, based on my personal analysis, it's looking very attractive. If you didn't manage to buy it at the lower attractive price range earlier, look for a pullback opportunity to enter and build a strong position in your portfolio. In my view, this stock is in a great uptrend, likely being held significantly by institutional investors. The price channel is also well defined, so watch the stock's movement carefully. You can consider opening a position in the price range of $92.6 to $94.6. The stock has just broken out of its base accumulation zone, so this could be a good time to enter and ride the trend more effectively. Of course, investing is always about probability, and nothing is guaranteed. That's why the immediate stop-loss zone should be set at $90.2. Don't hold the stock too deeply into a loss. If the stock shows signs of reversing and heading back to its previous range, sell immediately to protect your portfolio. However, if the stock continues to follow its upward trend, then this is a golden opportunity to maintain a strong position in a high-potential stock. Next, let's move on to the stock ticker CDNs. Looking at the chart, we can see that CDNs is showing strong performance. It has formed a fairly tight and long accumulation zone, which is a positive sign. Therefore, investors should closely monitor the stock's movements. If it shows a positive reaction, this could be a good opportunity to initiate a new position in your portfolio. Currently, the stock has failed several times to break through the $330 resistance level. This could lead to fatigue among retail investors. However, moments of fatigue often cause investors to overlook fundamentally strong stocks. Right now, the lower boundary of the accumulation range is thick, strong support, while the upper boundary is thin, suggesting a bullish bias. Given the current price action, the stock is responding well. If we examine the accumulation zone, we see periodic pushes to the upside. The momentum is relatively solid and the trading volume is healthy. Especially noteworthy is that the accumulation is happening near the upper boundary, a sign of institutional accumulation. If the stock continues to trade in a narrow range near the current price for a few more sessions, this would be very favorable for the bullish outlook. On the other hand, if the stock pulls back to the $306 level and stabilizes, it's still a good sign of healthy consolidation. Investors should avoid chasing the stock if it breaks out above the $330 level. We are essentially betting on probabilities here. If the stock closes at $293 on a daily candle, then it is best to sell immediately to protect your portfolio and re-enter later. This strategy helps minimize potential losses if the trade goes south, and if the stock rallies, it will likely surge strongly and benefit your portfolio. Now, a quick note on crypto. Many cryptocurrencies are still maintaining an upward trend. So, for those who bought at lower price zones, it's fine to continue holding. Don't panic sell, as the trend is still intact. Crypto hasn't violated its trend line yet. At the moment, crypto does not offer new buy opportunities, but is stabilizing within its accumulation phase. Therefore, if you already hold positions at good prices, don't panic. However, for those considering new entries, I do not recommend buying now. Crypto needs time to consolidate and shake out weak hands before confirming the next move, either up or down. I sincerely hope that investors will find a strong and profitable portfolio with the stocks you are currently holding. In my personal opinion, the stocks mentioned above offer excellent entry points. However, if you believe there are better buying opportunities elsewhere, feel free to leave a comment so I can provide feedback. You can also ask me about any stock you're currently holding at a loss, especially if your entry point was not ideal, and I'll be happy to share insights and help you learn. Please note that the views expressed above are my personal opinions and should not be considered as financial advice. I disclaim any responsibility for investment decisions made by others. I believe that you are smart investors, and you understand better than anyone else when to buy, sell, or hold a stock. So, take good care of your health to ensure you're always in the best condition to make sound decisions for your portfolio. Goodbye, and see you in the next video.